Hello, traders. It's Wednesday, the 19th of September, 2018. This is another Trader Bite. Thanks for joining me again. It's 8:01 a.m. Chicago time. I'm coming at you from downtown Chicago. Beautiful views. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market sentiment is generally a little slightly on the risk-averse side, moving to safety a little bit. Gold is leading the pack, up $6.60 or 0.55%. The dollar's weaker this morning. The Russell is the laggard, down 4.2 points or 0.24%, 0.25% or so. Interestingly, the bonds are down 7 ticks, and the notes are down 2.5 ticks. Really, objectively, the market's taking a nap, which it clearly did overnight. The changing of the guard didn't seem to happen overnight, and not much took place. And so that's where we stand this morning in terms of risk on. The DAX is up there. It's up 39 points. The chatter that I'm hearing, or that I heard throughout the day on the news feed yesterday, was basically the market's liking the fact that, okay, we've got this trade war going on. The U.S. has just taken on Europe and Mexico and Canada and China and Japan. But you know, these guys are going back and forth, a lot of propaganda and so on, but it's not like it's a 25% tariff if it does take place. They're talking about 10%, which is a lot more tempered. The market like that. They came out early on yesterday, and so, you know, and China said it's making moves to counter act that by applying its own 10% tariff and so on. So I think the market kind of took that as meh. It's not as serious as we think it is. And so we had this open drive yesterday and rally. Not my favorite kind of market yesterday in the ES. Open drives. It's one of those things where you just catch it or you don't. We'll look at the opportunities that it presented. Today is Yom Kippur, blessed Yom Kippur to those who observe it. There's a tendency that with Yom Kippur that trade is kind of slow. That compounded by the fact that we have quad witching Friday in 2 days, and so we have a pretty quiet overnight session despite the roll. Yom Kippur started yesterday. Yesterday late morning, my time, I believe. The volume yesterday was pretty light, 940,000 versus 1.1 to 1.3 million in the pit session. And so that's where we stand this morning. As far as what could interrupt our auction, we did get housing starts and building permits this morning, as well as a current account in the U.S. We got a bunch of numbers from the UK, CPI, PPI, RPI, and the Eurozone construction output. Looking ahead, really the only thing that's left, we do have Draghi, ECB's President Draghi, in 25 minutes at 9:30 Eastern. Expecting the comments there to potentially have an impact on related currencies and European products. But other than that, U.S., we just have crude oil inventories at 10:30 Eastern. Inventories are expected to show a draw of 2.5 million barrels. So that's it. Let's take a look at... I heard a joke, by the way, yesterday. It's probably an old one from the crash, from the 2008-2009 crash. One trader turns to another and says after the crash, says, this crash is worse than divorce. I've lost half my net worth, but I still have my wife. I thought that was funny, especially from a guy who's divorced. Anyway, back to trading. Not a very good joker. Anyway, so This is what was expected yesterday. Really expected an open auction in range because we opened in range, and we are trading inside of this bigger balance area. And what the break on the primary scenario, given the configuration we were in yesterday and the context we were in yesterday, is that we're likely to push to 29.1175. So the first scenario was for a rally, right? Which actually happened. But again, we had an open drive, which means that ranges are going to be expanded. Ranges are going to be expanded more than if we had an open auction. An open drive essentially says that there's a deliberate and aggressive push by participants to one side or the other. And so I looked for the break above 29.10 quarter, which was the Monday high, but it did push higher. So scenario one played out, but much more aggressively. Here's what we got. Okay, so we opened, we ticked down 2 ticks and then immediately had an impulsive move off the open. That's an open drive. Okay, that's one of the definitions of an open drive. Never revisited the open again. We did not have a two-way auction, so we did not have an opening swing all the way up to 29.06 from an open of 28.9775 and a test 28.97 and a quarter below. So the opening swing really is non-existent. The key opportunity that presented itself, which I passed on, I marked this down as an error. I talked myself out of this trade. A pullback to mid that bounced to 29.0450 right here. And then as it turned over, I saw pretty good volume coming and hitting the bid, but it was coming into absorption into the century figure, into this big stock zone right here. And we ended up with an impulse up. That was the key opportunity that was missed yesterday. Just to kind of smack myself upside the head, kind of a trade there that was missed. It was a setup that I chose not to take, which is just a poor way to approach trading, to pick and choose. We just don't know the outcome. And then from there, we rotated to the prior day's high, 29.10 and a quarter. We went to 29.10, pulled back, and then we continued higher to the naked point of control, pulled back to the IB high, and then so on. And we went to start testing the upper stock zones. These stock zones outside of this range weren't moved. And we ultimately ended up at the 29.1775 high against the 29.18 and a quarter stock zone from the past. And then from there, we drifted downwards. The point of control shifted to the upper quartile of the range outside of the IB on a thin profile as the high volume node shifted up, and it's a bona fide trend day up. Trend days up generally end up consolidating the next day with a poke higher. The high at 29.1775, just below it, 29.1750. There's quite a fight up there. You could see that it's a bit of a notch out in the profile as opposed to a taper. So the expectation was for the overnight session to kind of walk itself back up. Here's what the overnight session did. Very unimpressive. This is the overnight, 125,000 contracts, which technically is at or just above the mode of overnight volume, but we have roll, and with roll, that number should be, or it was expected to be, nothing should be, it's expected to be quite a bit higher. Look at the night before, 237,000 versus 125,000. Very little activity. Also, very Gaussian profile with sellers dominating the session. We spent a little bit of time above the close, but the overall overnight inventory is generally slightly negative to balance. The inventory in volume is also back at zero, which is completely balanced for a max draw of 4,000 contracts. And so the overnight session is not telling us is not telling us very much coming into the session, except to say that there's really little participation in the overnight trade, which may carry over into today, depending on what news comes spewing out from whomever. And so that's what we've got. We've got a market that pushed up. We had if you look at this on a 15-minute, we have an impulse pullback, very shallow pullback, potentially 38% or so. And then we have a continuation or an extension move. And now it's sort of doing the flagging corrective type of portion into the overnight session. And so coming into today, we don't have a clear, clean low on the low. We've taken back some of the rally. It leaves us with kind of a nondescript or in other words, I just don't have a very strong bias for today, one way or another. A lot of traders, a lot of books you read will say you don't want to trade with a bias. I don't know how you don't trade with a bias. Because if I'm going long, my bias has to be to the long side, because I'm trading the expectation that prices will likely go higher and that I would profit. So my goal is to create a bias, but what's important, what they should mention, is not to be attached to your bias. That's a whole different ball of wax. But this generally coming in, my primary scenario has an edge. What I expect to have an edge on the secondary scenario, that it's given the auction parameters and the context and the narrative, I expect scenario 1 to take place. But I'm ready to trade scenario 2. And those of you who have been following a while have heard me talk about the Monty Hall problem, where if scenario 1 is obvious and it is very likely to take place and it doesn't, it actually creates a much better opportunity for the other scenarios in terms of trading and profitability. More people are likely to get caught hanging on to that bias. The weaker hands are going to hang on to that bias, which creates a better opportunity for those who change their minds very quickly. Coming into today, let me get rid of this. Coming into today, we're opening just above the point of control, just below the point of control, and into this stock zone here. I'm expecting it to be fairly choppy this morning. I'm expecting a quiet trade. I'm expecting it at some point to test down into the overnight low, 29.0550 or so. Hold, and I'm looking for an impulse up that brings us back to the point of control, and then eventually a little bit higher. But overall, I'm expecting balance. I'm not looking for anything. My expectations are very tempered for today. Okay, that's the primary scenario. The secondary scenario, because it's pretty much an even split here, an open auction that makes its push higher, consolidates, has its impulse down. I'm waiting for that impulse to see which side I'm likely to favor or trade off of for a retest at 29.01, and we have an inside day on scenario 2 as well. Okay, would love to see it break out of the range, but not likely today given the holiday and so on. So those are the two key scenarios. Okay, so coming into the open, just remember your goal is to be an observant early on and find out which side is likely to win. You want to fight with the side on the side that is likely to take charge. So look for rotations, a big rotation, especially with a good delta, although delta is obscured a little bit this week, and then trade from that side. If the market runs away like it did yesterday, you know what? I'm not going to stick my neck out and try to fade levels, although there were plenty of scalps yesterday. If you're going to hold a strong position, it just doesn't make sense to fade an open drive. So let's see how it opens. Let's see what kind of an opening swing we have. Let's see which side of the opening swing breaks, and let's see how much aggression there is on the side that breaks. Those are all clues towards where we're likely to go next. Okay, I hope slowly the light bulb in your head is getting brighter and brighter with every day that you're listening, and you're seeing through the indicators on your chart and paying attention to the actual narrative and what the market is trying to do, how good of a job is it's doing, and things like that, before you decide to give your indicators the more attention than the actual narrative. Indicators are fine, just don't prioritize those. In my opinion, I've seen a lot of people just fiddle around with indicators for a decade, trying to find the perfect thing when they should have paid attention to how the trade happens, what the market narrative is, which is really what's important. Good luck, and I'll catch you tomorrow. Take care.